Hey, good morning. Let's go over today's trade plan. So in the overnight session, we got a pretty large sell-off where we saw the larger time frame bias, which has been bearish, finally exert itself, and we ended up seeing a move all the way down to the 19 to 22 support zone that we had, which at this point has been changed to the 19 to 21 pre-market support. So heading into the open, we know that the overall bias is clearly bearish. Even the short-term bias at this point is bearish. So you have that alignment across multiple time frames now where the sell side is in firm control. And even though we have 19 to 21 as pre-market support, that is an area that has already been tested and it has already provided a pretty decent bounce. So at this point, we may not get much of a reaction there. Below 19 to 21, we can get a move down into the 1909 quarter support and the 1904 to '06 half initial support zone. Responsive buyers can be active at that point on first test, if nothing else, simply because of short-term exhaustion into that zone. But right now, every time frame is coming back into alignment on the bearish side, so we do have to be very careful on long setups and continue to keep our focus on the short side. On the upside, we have the overnight high volume node at 26 to 27. It's not really a hard zone, it's more of a reference point, and ideally we want to see ES holding below 26 to 27. Above it, we have pre-market resistance 32.75 to 34.75, open gap 38, initial resistance 41.5 to 44, and finally 49 quarter to 51 quarter. Now, those upper resistance zones may not even come into play. We're already seeing a break below the 19 to 21 zone, and like I said, ideally, we want to see the market holding below the overnight high volume node and below 32.75 to 34.75. That would be a confirmation that the sell side is continuing to be in firm control. Now, on the downside, the other thing we do want to see is some downside momentum off the open because the market has already sold off a pretty decent amount, and we want to continue to see a bit of panic in the market. And if we start getting stability or a lack of downside momentum, it doesn't mean that the entire move is going to reverse. That's very, very unlikely at this point. But if you get that stability on the tick and the selling really starts to dry up, then you can start forming another balance area, right? So at that point, you could get that bounce back to 26.27, 32.75 to 34.75. So keep an eye on the 19 to 21 zone off the open to see if ES is holding below it, because below that support, the next key area is really all the way down at '04 to '06 half. So if you're holding below 19 to 21, then the next key support is really '04 to '06 half, and we could go directional on the downside there. The only other thing that can really come into play is that the market gets short-term exhausted, and then it's not that it's bouncing off of any key level, it's just that it's a bit overdone. And we can get some rotations just simply based off that concept. So right now, again, the bias is clearly on the downside. Our focus will remain on short side. It has been short side focus for the last week, and this is a move that we were anticipating. It's too bad that it happened in Globex. Would have been much nicer if it took place during the regular trading hour session. Higher odds that we would have capitalized on it. Now the move, majority of it has already taken place in Globex, but it doesn't mean that the selling is done. Like I said, this could go down to '04 to '06 half, and because the overall bias is bearish across multiple time frames, the selling can continue over the next couple of days. It doesn't necessarily have to, reverse or go back up. So at this point, because we have alignment on that bearish bias across multiple time frames, ideally you want to see that pattern of lower highs and lower lows continue into the '04 to '06 half, and that's a spot where you might get some responsive buying simply from exhaustion. And then over the course of this week, perhaps we can head even lower and test some of those lower zones. We still have an open gap at 72.75, a naked V pocket 94, but we'll assess that as it comes. Looking at the other markets on NQ, a downside objective is around the 4100 level. There's a short-term high volume node there that has decent potential to get tested today. On the Russell, we have the 26 high volume node that has high potential to get tested today, and that is short-term support in TF as well. So we could see a little bit of responsive buying activity off that level. So if the other markets are hitting their respective support areas at the same time as ES testing 09 quarter or 04 to 06 half, then there is going to be higher probability of a bounce. So on the downside, those are the key zones, the key levels. So those are the main ideas heading into the open. Let's keep an eye on the 19 to 21 and the 26 to 27 area off the open. It's going to help us just confirm that short-term bearish bias, and we'll take it from there.